Johnson & Johnson earnings and revenue beating the street's expectations, but the company did lower its earnings guidance because of costs that are related to acquisitions and changes with SEC accounting for that. Joining us right now is Joe Wolk. He is Johnson & Johnson's executive vice president and its chief financial officer. And Joe, let's talk through this. For the quarter, 282 versus the 271 that the street had been expecting. Revenue came in above expectations as well. What happened with the guidance, $10 to $10.10 a share? I think the street's at $10.01, but why don't you explain what's different?
Good morning, Becky. It's great to be with you again. Yeah, we had a very strong quarter, very pleased with the performance overall. As you noted, the top line beat and bottom line beat, as well as strong free cash flow generation. With respect to the guidance, had it left to its own devices, and we threw a lot at analysts in the last few days with some of these acquisition costs, we would have taken guidance up by about a nickel overall. The SEC has changed their guidance probably about 18 months ago with respect to what you can classify as special items. In the past, many companies would have taken those acquisition charges and classified them as a special item, get to adjusted earnings. You can no longer do that. And so that's really the adjustment. To your point, though, the analysts, the 5 or 6 analysts that have captured everything related to these acquisitions of Shockwave Proteologics and the NM26 antibody for atopic dermatitis, they're at 10.01. Our new guidance is in the range of $10 to $10.10. So the midpoint would be above what analysts would be expecting.
Okay. In terms of performance, you did mention that all of these big billion-dollar-plus platforms that you have, 2/3 of them outperformed. What was happening? Pharmaceuticals, I think, was the more important of the two?
Yeah, we were very pleased with the pharmaceutical unit. They had their first $14 billion quarter ever. Continued progress with brands that are on the market, Erleada, Tremfya, Spravato for treatment-resistant depression. So we were very pleased with the almost 9% growth that they were able to post. A number of those brands did beat consensus, and a number of them are growing at better than 10%. We would have liked a little bit better performance out of our MedTech unit. There's maybe 1 or 2 identifiable issues that are already being addressed or in the process of being addressed. But that's really the power of J&J, where we can have a little bit of volatility in one part of our business more than offset with better performance for the entire company to outperform.
Joe, that's something you've seen over the first half of this year, but there have been some pretty big clouds hanging over the company. Front and center, what the situation is with talcum powder and the lawsuits surrounding that. Can you give us an update on where things stand right now?
Certainly, Becky. So the May 1st, we announced a solicitation or proposed offer settlement with the ovarian claimants. That voting period opened on June 1st. It will close on July 26th. I would want to caution your viewers not to expect some kind of determination or announcement on July 26th. It's going to take weeks, maybe up to a month, for the administrator to tally the votes, vet the votes, make sure they're legitimate, and we'll go from there. With respect to the number of other claimants in the suits, we've already settled with more than 95% of the mesothelioma cases. We've already settled with the state AGs that were previously filed. And so we think we're in very good position. We're encouraged by the support that we have from plaintiffs' attorneys who represent claimants that help us draft the proposed settlement, as well as recently announced support from newer firms that weren't part of the development of that. There's a small, dwindling minority that's pretty vocal at this point, but we are, I think, in good position to resolve this in one way or another. I would want to remind investors, too, that with our cash flow generation, $7.5 billion year to date, and just look at what Johnson & Johnson has done over the last decade. We continue to do the things that have made us successful for almost 140 years now, and that's invest in R&D at disproportionate levels, acquire businesses. We just had the closing of Shockwave and a couple others that you mentioned earlier, and increase our dividends. And we're going to continue to do that. This is not something that the company can't handle. We'd like to have it resolved because of the overhang that you mentioned, but we're going to continue to do things that have made us successful for many, many decades.
Just last week, on Friday, you and Bristol-Myers Squibb filed an appeal at the U.S. Court of Appeals for the Third Circuit regarding what's going to be happening with the constitutionality of the Inflation Reduction Act and the idea that the government can negotiate drug prices with you. How important is that? Where does that stand? And what happens if you lose?
Yeah. Well, listen, I think price erosion has been part of the industry for a number of years. If I look at our performance, our stellar performance in pharmaceuticals actually has year-to-date 3% price erosion. So we continue to be premised on innovation and products that really change the standard of care. We do think there's constitutionality issues with the proposed reforms in the IRA, and we're going to fight those. But we'll have to see how that plays out. We do think it's harmful for innovation long term, and we really would like to have a transparent discussion about where the pricing is. You know, if we have great scientific innovation and nobody can access it or afford it, that does our business no good. So when we think about this, go back 6 years ago, the average discount and rebate that was provided was about 26% of list price. Today, it's getting close to 60%. And that's not just J&J, that's the industry at large. So we really have to have a conversation as to where are those discounts and rebates going, because they're not getting to the patients. We empathize, and we want to correct the situation where folks on a monthly basis for chronic meds would pay $10 or $15 for a copay. Now they're paying $75 to $100 and have also insurance premiums that are going higher. We need to address that, have a transparent conversation.
Are you saying it's the health insurance company's fault? Is it the pharmacy benefit manager's fault? Is it the idea that medications have gotten more and more expensive as you get drugs that can do more than they used to?
Yeah, well, I think there's a couple things. Yeah, I wouldn't want to assign fault. We'd hope for hopefully a solution and a transparent discussion the way the industry has stepped up. Our industry has gone and has had price erosion at J&J over the last 5 or 6 years. It's been 3 to 4% consistently each and every year. I do think, though, that you got to remember that over 90% of the prescriptions today are generic. And somehow we're penalizing the inventors who put capital at risk to come up with great therapies to not just treat, but potentially cure cancer, IBD. We're seeing it in obesity and diseases of the brain. These are important medical breakthroughs that actually lower the cost for healthcare for society. And I just think we need to have a better discussion as to where are those discounts and rebates going? Why aren't they getting into the hands of the patient?
Do you think it matters who wins this next election? Would you expect to have a different outcome with a Trump administration? I guess I would approach that. Johnson & Johnson's been around for a long time. We've dealt with all different types of administrations. As I think about it from a business perspective, you certainly want to have an administration that is at least neutral and not hostile to business. If it's friendly, that's even better. I think in terms of tax policy, that's critically important. I can point to an investment we're about to announce shortly, over $1 billion with the latest cell therapy manufacturing. It's going to be likely placed in the United States. In 2016, that was not the case. That would have been a manufacturing facility probably built overseas. So we want to make sure that that's front and center. I do think that having business-friendly mindsets where we can have that transparent discussion that I talked about on pricing is probably more advantageous to getting to a fair and equitable solution. And then lastly, I'd probably look for somebody who is willing to entertain tort reform. We saw just last week some really good pieces on third-party litigation funding and some of the tactics that plaintiffs are using. Senators Cornyn, Tillis, Comer, as well as Representative Issa, are starting to look into this. And we think that's good, not just for Johnson & Johnson, but quite frankly, American business. That is also an element that drives up costs across the board.